So we'll start with a summary of global energy commodities as of Friday, the 13th of October. Let's look at what global energy commodities are saying. Well, interesting mix in terms of the Friday outlook here on global energy markets. Brent is up. That's a good thing compared to what happened the week before. Up by a whopping 423 basis points. Have you seen that figure before? But that's a huge rise there in demand. Some positive economic figures coming out of North America, Europe, and of course China, a big driver of demand. And it also seems like the Saudi OPEC plus tightening of oil markets is having an impact. But natural gas not so bullish, ending on a bearish note. Again, huge movements across board here on the oil markets. 4.41%, WTI up 3.56%, natural gas is down, and 3.82% gasoline. Well, that's it for energy market. Let's take a look at what happened in global equity markets, starting, of course, with Nigeria. Take a look at the all-share index on the Nigeria Stock Exchange. A positive end to the week, albeit a mildly positive end to the week. Markets up at the end of trading on Friday by 10 basis points to finish at 67,200.69. Moderate trading volumes of 4.16 billion and of course a market capitalization of 36.91 trillion naira. What's Europe saying? What's America saying? Let's take a look. Euro Stock 600, a bearish end to all the main European indices as at Friday close of business. 1.1% down is the end of trading figure for Euro Stock 600 and all the other indices. Look at FTSE 100 in London, down by 59 bips, and some of the other markets across Europe also down by more than 100 basis points. Interesting mix of signals and factors there for Europe. What's Wall Street saying? Similar sentiment. Let's take a look. Wall Street also following suit, except, of course, the Dow Jones Industrial Index, which was up, or some would argue, flattish by 0.01%. Not really much of a change there, but all the other indices in the North American market also down. And of course, my favorite part of the markets is my top picks for the week. Let's take a look at what's happening. Nigeria's central bank has lifted the forex ban on 43 items that were previously restricted. This is quite an interesting one because, of course, they were banned from importing to buying dollars. They had to go to the parallel market, which meant the currency was further devaluated due to an increase in dollar demand. That policy has now been reversed. It was instituted initially in 2015. Wow, 8 years ago. So big change and big market making there by the new CBN governor and his team. How will that impact currency demand? Will that help boost liquidity? Well, I'm talking with Mukhtar Mohammed later on the show to look at that more. Another big item here is the Israeli war with Gaza and the Palestinians is having a huge impact on foreign reserves. Israel is having to sell about $30 billion of its foreign reserves to defend the Israeli shekel, its currency, which has fallen by about 7% over the last week. Huge tumble there. Markets obviously really concerned about sovereign risk in Israel now on the back of the conflict, which is escalating with Palestine. What else do we have here? Nigeria's oil production improved in September. It did improve, all-time high of 1.3 million barrels or so a day, but still well below Nigeria's OPEC quota. So we still have quite a long way to go with helping boost our oil production, and a lot of the above ground risks there need to be solved. A lot of the evacuation challenges also need to be solved. Of course, oil production is still a major forex source for Nigeria. So all of these dynamics are obviously interlinked. And of course, closely related to that, the NLNG CEO has said Train 7 of the Nigeria liquefied natural gas production may not come on stream anytime soon. Huge challenges here. Nigeria currently is meant to be producing 22 million tons from trains 1 to 6 or 1 to 7. 7 is the one that recently came on board, recently saw some financing from banks, but he's now saying due to some operational challenges and environmental issues in terms of the business environment, they may not be able to meet that mark. Well, that would be a huge blow for Nigeria's plans to boost its LNG exports, but perhaps the fortunes and tides can be turned on that with some policy support as well as a review of the current export and evacuation plans of NLNG. What else do we have? Finally, Microsoft's $69 billion acquisition of Activision Blizzard has finally received UK regulatory approval by the watchdog. Good news there for Microsoft, of course, and Activision Blizzard, the target company. Perhaps not so much the outcome the regulators wanted in trying to prevent these emerging tech monopolies. We'll see whether other markets are more stringent about regulation. Well, that's it for my business top picks. And now for some other top stories from around the world. First, we start with the Naira. Due to the Central Bank of Nigeria's struggles to meet demand from businesses and individuals for dollars, owing to declining reserves, of course, and declining dollar inflows, the Naira sank to new lows on the black market. The local currency declined to 1,030 Naira per dollar. I can't believe I'm saying that. On Wednesday from 1,015 the day before. I mean, those are all-time lows for the Naira. Meanwhile, still on Nigeria, the Group CEO of Nigeria's national oil company, NNPC Limited, has addressed the ongoing debate about the fuel subsidy in Nigeria. In a chat with State House correspondents, Mele Kyari clarified that the NNPC is not incurring subsidy costs. Kyari highlights that market forces and global oil prices determine fuel prices in Nigeria, and that there is no financial burden placed on the government or taxpayers due to subsidies. On Q's resurfacing, Kyari reassured the public that there is sufficient product supply and no significant issues regarding the delivery, while efforts are also being actively pursued to address critical matters related to access to foreign exchange. The war between Israel and Hamas has darkened the horizon for a world economy that was already plagued with weak growth. Speaking at the IMF World Bank annual meetings in Marrakesh, Morocco, IMF head Kristalina Georgieva said the IMF was, and I quote, very closely monitoring how the situation evolves, end of quote, and how it is affecting all markets, and noted that the IMF's World Economic Outlook, which was released earlier this week, already showed weak global growth. German sandals maker Birkenstock launched on the New York Stock Exchange on Tuesday with a valuation of $8.6 billion. Birkenstock set its share price at $46 per share, the firm said in a press release early. A total of 32.26 million ordinary shares will be offered in its initial public offering, trading under the symbol BIRK, Birk. Birkenstock, the longtime German shoe brand known for its comfy and durable styles, went to the market for an IPO. Eskom chairman in South Africa, Mfo Makwana, has resigned, Minister of Public Enterprises Pravin Gordhan announced on Monday. In a short statement, Gordhan said that Makwana would step down at the Eskom AGM scheduled for the end of October. He was appointed only a year ago and is the shortest-serving chairperson of Eskom to date. Non-executive director Mteto Inyanti will be appointed chairperson of the board. Inyati, who previously was CEO of Altron and of MTN South Africa, stepped down from the board of Nedbank last week due to increased capacity constraints. An earlier statement referred to Inyati as the new interim chair, but this was subsequently corrected. The Central Bank of Nigeria has clarified that, contrary to speculation, its central bank digital currency, also known as the e-Naira, doesn't in any way constitute a threat to the country's financial stability. The central bank's clarification came against the backdrop of news reports that the digital currency had the potential to distort financial stability. However, in a statement, CBN Director Corporate Communications, Dr. Issa Abdul Mumin, said after carefully reviewing the reports, there seemed to be a lack of understanding of portions of the forward and some articles in the CBN's recently released Economics of Digital Currencies, a book of readings. The International Monetary Fund has issued a warning that more severe tightening of financial conditions may cause funding issues for banks facing increasing credit risks. In a report released on Tuesday, the IMF claimed that research conducted in numerous countries has shown that increased borrower risk has caused a slowdown in banking sector lending. The fund says that while central banks around the world have been tightening their monetary policy rates to fight inflation, banks would lose a sizable portion of their equity capital if increasing interest rates and inflation persists and drives the world economy into a recession. In September, Ghana's inflation rate dropped to 38.1%, its lowest level in a year. Samuel Kobina Anim, a government statistician in Accra, reported that annual inflation dropped from August's 40.1% to 38.1%. Well, that's it for the market roundup.